Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday, April 26th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. On the show today, the earnings parade will continue. Just going down the list here, I see Twitter, AT&T, Chipotle, Boeing, Credit Suisse, Procter & Gamble, Pepsi, Wynn, U.S. Steel, Northrop Grumman, Hershey. The list goes on. We'll cover as many of them as we can. We have one guest for you today. That'll be Kirk Duplessis. He's the founder and head trader at Option Alpha. Joel, how are we doing on the S&Ps right now?
We're a little bit in the red here by $1.50. The closing price at $23.85. We got through that, $86.75. Big resistance at yesterday's high, 89.25. A couple highs from March at that level as well. Crude trying to mount a rally, but strong close, weak again, trading down 36 cents at 49.19. We may want to take a look at yesterday's low in crude as support, 48.87. Gold and silver going opposite directions. Gold down $1.80 at 1265.40, and silver up 3 cents at 17.62. Dennis, quite busy after hours and pre-market for you today.
Oh, there's a lot of action. The earnings parade, just absolutely incredible, and some big moves. I know I'm going off the order already on you, Spencer. I'm already taking you off the order. You have Twitter
okay.
First on your
It's
list,
okay.
But I'm going to U.S. Steel. X I'm going to first because it is down a cool 18% here this morning. This stock, a wild child. They just started hitting out handles, 30, 29, 28, 27, 26. This ain't traded under $25 last night. U.S. Steel, so just getting slaughtered here. Back in February, this was over $40. It's now $25.45 here in the pre-market. Trade incredible amount of volume last night. They knocked all the steel stocks down with us. Give us the numbers for X, and then we will jump into the details of this slaughter.
Yeah, X reported Q1 adjusted EPS of an 83-cent loss versus a $2.15 loss in the same quarter last year. The GAAP EPS was $1.03. They may not compare to the 32-cent estimate. Sales of $2.725 billion versus $2.92 billion, and they see their fiscal year EPS at $1.50 to $2.90. So a large range for the fiscal year EPS.
Anyways, price don't lie. They murdered this thing last night on heavy volume here. So this isn't one that I think is going to bounce right back here because this is traded. Actually, how much volume do you think this traded last night after hours, Joel? Like I was just seeing hundreds of thousands.
Millions
of shares.
Yeah.
So this is what you call heavy. And it's been trading the 25 handle now for a while. Show us the after hours chart.
Dennis, you made a great point yesterday, regarding the volume on the cat. You mentioned that, I was talking about the book and maybe get a low enough open, to take, to go long, which you could have done anyways, but you have millions of shares trading. I'll just give you the pre-market low at 24.85. On that bracket when that low was made, 1.5 million shares traded. So I'd keep an eye on that. We're now 60 cents above it. 25 is a whole number. The thing is you're getting into this whole vacuum area from post-election. So
you got more bad news for us. It's an incredible down move, but yeah, I see what you're talking about.
Yeah, I mean, I could give you some daily lows here. The big gap to fill, will this fill the gap between 21.39 and 23.86? That was the day following the election. So just the worst trade of the Trump trade. If you didn't get out of that one, you're deep underwater.
It was one of the best, and it started down at like $16-18. I think actually it was the next day, or maybe it was that day, $20, and then it had the huge rally. Obviously, you were just looking here out at the dailies there, and we rallied all the way up to over $41, and just quietly here we've been leaking, and now the massacre here, and this one's not going to be quiet. Feels a little bit like capitulation here. I mean, I'm going to let the dust settle on this thing though, because just coming here and trying to, call the bottom, well, you could have been calling it 28, could have been calling it 27, 26, 25, and it was just too much selling pressure knocking it down. Now we have consolidated for a while, so I'll use that number of years, 24.85. Maybe, try it one time. If it takes that out, I don't want any part of it, because I watched this thing just take out handles like crazy last night, and it was knocking down every steel stock. So it wasn't just U.S. Steel. We've been saying sympathy hasn't been working, and the sympathy moves aren't huge. They aren't. Sometimes they used to be bigger, but they're still there. And NUE here is trading down. Like, obviously, it's I think it's still one of best of breed. Full disclosure, it's the only steel stock I do have in my portfolio. It's down 2.2% here this morning. Also, Steel Dynamics is trading down 4%. That's STLD. If you want to look at, even some of the European ones, MT, ArcelorMittal, is trading down 2% in the pre-market. It got crazy last night. It was trading down to 757, which I was like, wow, that's just ridiculous. I actually did buy some last night. I sold it here this morning on obviously the comeback, because I did not think it was going to open that far down in Europe, and it got a little ridiculous last night on trying to get on sympathies. So there's plays to make here. It's just a matter of, calling and obviously, not getting in front of a freight train if you're trying to pick the bottom in X.
All right. Should we move on to
you
Twitter?
Take over. You take
all
the
right.
lead here, Spencer.
All right.
We'll follow your list. And I like the stock you have at the top of your list now.
Twitter? Yeah? All right.
Let's talk it. So why? Okay, I come here this morning. Twitter's up 11% here. Tell me why.
Okay, well, there's a lot to get to, so let's just run through everything. So Q1 EPS 11 cents versus a 1 cent estimate. So they beat that. Sales of 548.25 million versus 511.91. So they beat the Q1 on the top and the bottom. They saw Q1 average monthly users up 6% year over year, and daily active users up 14% year over year, and up 11% quarter over quarter. So all that on the surface sounds great. However, they did actually lose revenue for the quarter. It was their first quarterly revenue loss, I think, Joel, you said, since the IPO. And
revenue went down overall?
Despite the fact that monthly average users and daily average users are up, ad revenue for the month or for the quarter is down 11% year over year. So they got more people on the platform making less money.
But it's good news here this morning, because the stock is trading up 11% in the pre-market. This is your classic everybody hates the stock. And when everybody hates the stock, it's very easy for a stock to rally on okay numbers. And that's what I think you're seeing here this morning, is that stock has been hated here for a long time. Everybody loved it up at 20, 21, 22, and it's going to get taken over. Everybody hated in the 14 handle. I talked about the 14 multiple times. I know Brad over there in the UK bought some of 14, just above 14. Congratulations, Brad. You're being rewarded here this morning if you were listening to the show. $14 is a big level there. That was the low, and that's why I had 14 on my radar too. It never got there though. It never got quite to the number where I wanted to get to. Just above it, 1372, 1440, all these lows back in May, June of 2016. That's 1 year ago, and that's where there is some major support here for Twitter. And now that's out of play here, because we're getting a big pop. Over 4.9 million shares have already traded here, so a nice pop for the Twitter bulls, if there's any left out there besides Brad.
And boy, I tried to get something with you on this one about a pre-earnings run, and I think I probably would have missed it because it didn't get into the 15 handle. Let's see what happens. I mean, this could just keep going. But first thing we have to do is take out the pre-market high of 1660. We're 30 cents away from that. Let's go back on the dailies. We haven't traded in the 16 handle. You need to go back to mid-February. And you got a level right there. You had, this is back in mid-February, you have a trio of highs right between 1651 and 1670. So I'd be targeting that area as resistance off the hop. If it just barrels through there, gets in the 17 handle, Twitter could have one of those really good days. But contesting with a triple top, which coincides with the pre-market high.
Let's go to Chipotle CMG. The stock had a good report, and it was popping big time on the report. And then there was this little talk of potentially somebody maybe getting some information from their customers. Spencer, give us the details.
Yeah, they can't seem to get out of their own way. Chipotle reports Q1 EPS of $1.60 versus $1.27. Sales of $1.07 billion versus $1.05. Looking good on those numbers. Comps for the quarter up 17.8%.
Nice.
Looking good all the way around. They do see fiscal year comps up in the high single-digit range and are projecting around 200 new restaurant openings, but unauthorized activity on their payment network. For yes,
So basically somebody trying to get credit card information from the customers.
Yes, and that right there, you said that was the catalyst, I think, for
Yeah, because actually the earnings report came out, the way they disseminated this, is suspect as well. Because they gave all the good news, the earnings report came up, and you see the stock trading up like $30, and then a little fine print here on the conference call. Oh yeah, we had a little unauthorized activity, and they just pulled the rug out from under. It went from 500 down to like 4. It went red on that. Just boom, fell 30 points just like that. Actually, Joel will show you the after hours chart, and you can see, during the conference call that nice huge spike, and then the unauthorized. And boom, we'll give it all back here in 10 minutes. And then it popped off those levels, and it's kind of just been hanging out and leaking a little bit lately, though. Up $6 still, so it's good. But at the same time, market's obviously concerned about this unauthorized activity.
And you remember Target a few years ago when this surfaced?
What happened with the stock, though? So give us, because now we have obviously some, we can use that information to maybe try to play Chipotle. How did Target perform? Do you remember?
Ah, man,
They come back after that? Like, did they hit the stock and then
they hit it? They hit it, and let me, man, oh man, I know we're really going into the archives here.
I remember it, but I don't remember what the stock.
Was it the end of 14? Was it the end of 13 or the end of 14?
That's a lot of years you're going back there.
Yeah.
Let's see if we can find it in the pro. Okay,
Spencer's gonna hunt, and we'll try to figure out and put some dates to some stuff here to see, because this is an interesting, because if they didn't have this unauthorized activity, I think the stock could be over $500 right now. So
it did trade over 500.
It did. Yep. And maybe it would still be up there right now. So obviously, you've got that concern weighing it down, but I don't know if I feel like the earnings were good enough that maybe it would outweigh this. So, maybe the stock starts to bounce back because of that. It was
end of 2013.
But it's hard to say.
End of 2013.
Oh, wow. That was pretty good on me. All right. So you have in the end of 13, yeah, you did. You had a slide there. I mean, it was up near the $65 area. I think they ended up replacing the CEO off that. I think there was a lot of price action in there, but I'll just go to CMG real quick. And I just think another factor too, even if you wouldn't have had this bad news, I mean, you're seeing CMG in the 500 handle, Dennis, for the first time since March of last year. So I think even if they wouldn't have had
logical resistance.
Yeah, you talk about 500, nice even number. Well, it got through that, but listen to the highs in the 15-minute bracket. 505.01 and then 504.76. So 505, you know what I'm doing? I'm putting this on my long-term wish list here. And what I'm going to hope for and what I'm going to look for is some kind of retracement off this move. We went from what was the low of the move here? The low of the move, we've had 353 was the low. I guess you consider the high of the move. 480, 150, 75.
I love your
I don't know. I don't know if I'm ever going to get this at 410, 420, but that would be a nice retracement. I thought it was headed in that direction. We'll just have to see. Right now, the trading on the lows of the pre-market session of 476. Always can go to the dailies. Yesterday's low at 68.27. 2-day low 65.20.
Okay. AT&T. Verizon, we heard from day before. They hit Verizon pretty hard. AT&T's been bouncing around here. So you saw AT&T have a pretty hell of a range here. Give us the numbers, Spencer, because it rallied, and then it fell, and now it's flat.
AT&T Q1 EPS 74 cents, that beat by a penny. Sales of $39.4 billion versus $40.5 billion, so they missed that number by a little bit. They are seeing fiscal year 17 adjusted EPS growth in the mid-single-digit range.
Stock trading flat here, Joel. Tell us about the after-hours range. I saw it pop, I saw it drop, and now I see it flat.
I tell you, at first you got to dropped to 39.50. Then in
I
the last,
saw that drop. And that drop, I think somebody jumped the gun because I was like, I saw it drop 39.50. I was like, I don't see the numbers. I don't see the numbers. And it was like a minute later, and then the numbers came. So I think somebody jumped the gun, and they're like, I need to get out. I need to get out. And they sold right before the numbers. And then you had the pop on the numbers, I believe.
wow, yeah, and then right away, you hit 40.47, and now just settling in here at $40. I'd like to see another low here. You got three lows in the upper 39 handle, actually four lows. So maybe get a shot to pick this up at 39.80, 39.90. And you got a lot of support there from the last 3 days. The yield's probably getting up there real nice. Coming back on the upside, that 40.40, just a bunch of, I mean, this thing could go anywhere between 40 and 40.50, 40.45, that whole area. That's the area of a bunch of highs. So kind of range bound still after a while after hours in pre-market.
Well, that's a great point you're making, though. 4.91% is the dividend on Verizon, and 4.90% is the dividend on AT&T. So they have both of these under 5. We know when these stocks get to 5% yields, there seems to be a magical number, and they seem to find levels there. Verizon, the 5% yield would just be a little bit lower, probably near that 46.01 price that we traded back in November. So if we look at that, as a bogey, we're at 46.70 right now. I think there's some support down there. The AT&T support's a little bit lower, though, because AT&T had a run, and it didn't sell off nearly as much as Verizon. Its major support was back at 36. So I'm more air below. So, just from a technical perspective, I think I like Verizon here more than AT&T.
Right then, big decline since you hit 42.50, but this time it will take a while. It will, to put in a rounding bottom or some kind of pattern like that. But interesting how T and Verizon, have sold off, with our rise in interest rates.
Let's jump over here to Boeing. BA trading down a couple bucks. Spencer, how'd they do?
Q1 adjusted EPS of $2.01 versus $1.93 estimate. Sales of $20.976 billion versus $21.34 billion. So they missed that number. They are, however, raising their outlook. They are raising their fiscal year adjusted EPS outlook. It was $9.10 to $9.30. That was a range. Now it's increased by 10 cents on either end of that range, and that's right in line with the $9.36 estimate.
I mean, that's not much of a raise here.
No,
So,
but a raise is a raise.
Yeah, a dime we're talking about here. So, anyways, Boeing trade down here in the pre-market. Another example of a stock. Maybe the report's not that bad, but it's just the fact that everybody was in this thing. This thing's been running up the entire 2017, 155 to 183. It's all about expectations. I'm going to say it again and again and again. You can't take the numbers just at face value. You got to see what the stock's done into the report. Has it run up into the report? Has it sold off into the report? What's it been doing for the last 3 months since the last time it reported? Because if it's had a substantial run up, that means they need to blow it away. Boeing did not blow it away. Twitter, the exact opposite. If it's had a substantial sell-off, which it has, in 2017, we started the year up here, at around 1650. We're back to there now on Twitter. But again, just looking at expectations were pretty low here for Twitter. They didn't have trouble beating those lower expectations. Just like Boeing, expectations were higher, and they did have trouble beating those higher expectations. So, it's always something. If you're taking a stock through an earnings report, we as day traders, I don't like doing that. But longer-term investors, swing traders sometimes do it. There's a play to look at what the stock did prior to the report. What's it done in the last 3 months, and then analyze, and then if they really need to blow it away or if they can just beat and rise on it. So that's the biggest thing I always look at, what the stock has done going into the report. And Boeing ran up, and it's not good enough.
All right, pre-market low just under the round number of 180 at 179.98. Go to your dailies here. Pick your poison. I see one low at 79.42, and then I see a double bottom at the 78.25 area. So there's some potential levels of support. If you get a pop up and you're looking for a gap fill, maybe you want to get an order out there at 182.50. The close was up at 83.51, but 82.53 would fill the gap from yesterday's trading.
Going off the list here again, we've got Dr. J in the chat wants to know about STX and UTX. One is Dow Component, and one is a stock that just moves around a lot. Seagate is a wild child, and this is another one. So I haven't even heard the numbers from Spencer here yet, but let's look here. Seagate started the year 2017. Since the last report, when it gapped up, before that it was $38. Had the gap ago in the last report from 42 up to $51 now. It's been running straight up into this report. So now you see the stock down 7%. You're like, well, without even hearing the numbers, it was going to be hard for Seagate to go higher unless they blew it away. And I'm assuming they did not blow it away.
No, they did not blow it away. Q3 adjusted EPS $1.10 versus $1.07. Sales of 2.7 versus 2.71 billion. So pretty average.
Numbers not bad, though, but again, they kill the stock for the simple reason that the stock ran up too far going into the report. Your Western Digital, Joel, will probably be having a sympathy move, just bringing up for the first time. Yes, WDC is trading down 84.90. Those two stocks pair trade well together, so obviously you're trading Seagate. Keep an eye on WDC. You still got your WDC shares?
Yeah, I had
eternal hold for you on that.
I know. Well, when we had a little uneasiness, back when the market sold off, I said, you know what? I'm not going to panic here, and I just had a mental stop at 70. Nice round number, and it got pretty close to that. The low of the move was 71.38, so maybe I'll bump it up now a little bit. But we should talk about this STX Seagate chart here because it's just in free fall, Dennis. I mean, someone's got the foot on there. They're hitting it, making new lows on the pre-market session. I mean, this is the kind of activity where, if you're buying, hopefully you're short. Trying to long could be dangerous. Coming into a potential area of support, I see a double bottom at the 45.70 area, but I'd only would use that if I was, attempting to cover a short.
There's so many people want to be a hero, and they want to be the person that culls the bottom, and they want to be the person that, is calling it on the way down as the stock is going down. It's difficult to do. I mean, we saw with X last night, 29, 28, 27, 26, 25. I mean, you're getting slaughtered if you're trying to call the bottom of that, because I don't think anybody thought it was going down to 20 than the 24 handle last night. Seagate's the same thing. We're digesting the earnings report. We just reported here this morning. It's not good. It's in a free fall here. I'd wait for the first bounce, and then at least you have a level. And then if you want to jump in and say, okay, maybe it's going to be a double bottom, at least you have a level then. But just randomly picking a number and saying this is going to be the bottom, you might get lucky, but it's difficult to do.
Yeah, and just looking at the Western Digital, I think they report afterwards. We are trading down in the pre-market, but what's interesting here about Western Digital trading at 84.57. We did take out yesterday's low, but we're not even at the 2-day low of 84.16. So nice round number there. I'm sure it's working its way to it, but Western Digital holding up okay after the Seagate numbers.
UTX, let's talk the Dow component here. It is trading up in the pre-market, up $1. And a stock that ran up a little bit in the report, but you're talking $100 stock. And so, okay, well, really, 2017 started the year around 112 or 116. So, before we hear the numbers even from Spencer, I would say the stock's got to do okay. I wouldn't say they have to blow it away to go higher. So how do they do?
Well, I mean, you mentioned that run-up. I just look at the three headlines before the earnings report. The three most recent headlines from the Pro feed is April 21st, new 52-week high. April 24th, new 52-week high. April 25th, new 52-week high. So new 52-week high all the time. Anyway, Q1 EPS $1.48 versus $1.40. Sales of $13.8 billion versus $13.5 billion. They see their fiscal year EPS coming in line with the estimate, and the sales for the fiscal year coming in line with the estimate as well.
They're good numbers. There's no doubt they're good numbers. I'm going to the buck. When stocks making new all-time highs, you can never hurt by going to the buck. And I can't see that many levels because too many people have lettered the buck with these 100-share orders. Anyways, 118, I see 5,800 shares. I'd imagine there's some size of 120. I'm not sure you're going to get up to there, but it is a $117 stock, and that's just such a psychological level. Also, where your calls and puts are going to be priced, your longer-term ones. I think 120 is a level where there might be some initial resistance.
Yeah, I mean, it's hard after the Mickey D's and Caterpillar from yesterday.
But let's say Caterpillar blew it away. I mean, they absolutely blew the numbers away. But yeah, that makes you scared trying to short stocks to all-time highs. And see Cat just keep going through 100, 101. Exact opposite of U.S. Steel and Mickey D's too. I don't think anybody saw a 7-point rally coming out of Mickey D's, and it had run up into the report. Those numbers were just really good.
What about those analysts? I mean, come on, we come out and we when they gang up on something, we come out as a turning point. Boy, oh boy, those
You're
guys
right
nailed it.
on
They were
McDonald's.
dead right on that one. I don't even think they expected that kind of move. But UTX, I mean, you closed at 1687. That's all-time closing high. So to me, that's really the only relevant number. If we start to go into decline and it goes below that, as far as the upside goes, I mean, we're trading right at the highs of pre-market session. Something tells me there might be someone lurking at 118 here because since 7:30, going back over the last 45 minutes, all your highs have been in the upper 117 handles. So something, I just got a little
I
feeling
saw
here.
5,200 shares. It wasn't much, but that's not saying that there's not more there too. And it's a $118 stock, so it's something. It's at 5,800 shares now at 118. So
Yeah,
that's in the
so
New
I
York bucks. There's a
it,
little order there. It's the only one that stands out. Everything else is 100 lots, 100, 200, 300, 5,800. So it kind of stands out a bit.
Yeah, then you have your algos that won't show anything, but
Oh yeah.
if there's any bid that pops up between 117.90 and 118.10, they just hit it without displaying it, right? Because they have it
Well, and you have
mechanized.
institutional algorithms too that will do that too. Like, let's say you have institution that's using an algorithm, and they might say just sell everything above 170. They don't want to show their hand. They want to
Right?
sell 20,000 shares. Well, it could say 117.90 every time bids there, smack it, and they do that. And bid 500, boom, you get them. Bids another 500, boom, you get them. Gives another 500, boom, you get them. That's just some institution that's just trying to obviously get out of some of a sizable position, but they don't want to show their hand. A lot of institutions don't want to just throw out a 10,000 or 20,000 or 50,000 share order because they know everybody's going to step ahead of it and it's going to be used, to lean on. So why am I going to, try to give them, high frequency traders insurance out here? I'm not going to just sit my orders out there. They got smarter. The sharks got smarter. Years ago, when I first started in 1999, 2000, everybody showed their hand. They weren't using algorithms. You want to sell 100,000, you threw out 100,000. But now in this 100, 200, 500 share world, especially in a $118 stock, it's difficult to get executed on a 10,000 share order. So you got to, go along with the flow, and you've got to cut that order up into smaller orders. And that's what the institutions, for the most part, do now.
Do you see the volume in Twitter, Dennis?
Where is it at now?
5.8 million.
Huge, 16 and a
Yeah.
quarter, huge volume. So it's lifting on volume. We say volume is, what we need to see, when you're looking at some of these prices, if you're in the price discovery mode. And Twitter's trading up here, so I don't know if it's going to leak today. I think you got a few people that are
Yep.
short stock still saying, uh-oh. And, they're going to be scrambling a bit. So not going to say I'm going to put a bet on this with you here, Joel. I'm not
No,
getting
I'm not
here
either.
yet. 16 and a quarter, it's kind of in the middle of nowhere for me, so I'm not bullish, I'm not bearish at 16 and a quarter. I liked it down at 14 and never got there. 16 and a quarter, it's up a little bit too much. I'm not going to chase it here today, but I'm not hating it up here either.
All right. We have any more Dow components here that to report, or should we?
Any more down? Oh yeah, Procter Gamble,
PG. Yeah, PG reported this morning. They reported Q3 for them, EPS, 93 cents versus 94-cent estimate. Sales of 15.6 billion versus 15.7 billion, and they reaffirmed their guidance for the year.
Kind of that's the same with stock action here. Not much happening. It's down 1% in the pre-market. Again, this conservative stock doesn't usually get hit too hard. It's got a 3% dividend yield. $89. I don't know what to say about this, Joel. Give us a level. One number.
I'll give you one number. Yesterday's low, 89.01. If it holds that, there's a chance for it to recover. Closing price at 90 and a quarter high. I think now that you've had some downside action, I think the sellers will be reloading at 90. If you do, though, take out that 89 even level, little support. Just look at your daily lows. I see a 3-day low at 88.61, but not a great number. Round number of 90. Also, the closing price.
Another stock having a pretty good morning and a pretty good after-hours session was Wynn Resorts, WYNN, and that stock is trading up 5 points here in the pre-market. Spencer, tell us about how Wynn did.
Wynn reported a Q1 adjusted EPS of $1.24 versus 97 cents. Sales of 1.48 billion versus 1.38 billion. So great numbers on Q1 for Wynn.
Winning. Stock up $5 here. You're seeing sympathy moves in Las Vegas Sands, which is LVS. It's up 2.5%. And MGM is trading up 1.8% as well. So both of these casino stocks winning off of the Wynn numbers.
Yeah, hard to give you levels here with the gap up. I'll just give you a pre-market high, 125 even. Very little volume is trading back off at 23 and a quarter. Let's see if you find any sellers. We have not been in the 120 handle since May of 2015. The high early in May was 132 even. Not sure if we're going to see that, but good numbers out of win. And you know what? This stock has been, there's a nice double here. Remember this thing? Yeah, more than a double, almost a triple. This thing bottomed in January of 2016 at 49.96. So over a double here. See if they take some profits. Yesterday's closing price, if we ever get down there, 118.22 should be good support.
Quick and balance look, Twitter 113,000 to buy. That is going to grow a lot by the time the stock opens, I think, with the stock trading up as much as it is. Visa 57,000 to sell. That stands out. US Steel 140,000 to sell. That is probably going to grow for the same reason the Twitter imbalance is going to grow. Caterpillar 103,000 to sell. So maybe some institution taking some profits from yesterday's huge run. Looks like that same institution might be nibbling in McDonald's too, because Mickey D's is 48,000 to sell as well. Just jumping over, Bank of America 88,000 to buy, Merck 35,000 to buy. That's about it. They're all pretty small here yet. We'll give you another update at 8:55. I just want to bounce over here, unless there was any chart you want to talk about there, Joel, to Costco.
Yep.
Because COST will move away from the earnings parade just for a second here. Costco announcing a $7 special dividend last night. We know the market loves their special divvies. I love special divvies as well. I don't own Costco, wish I did. Stock is trading up 5 points here in the pre-market, $177.80. This has got to be getting very close to an all-time high.
Very, very close. Company must be flush with cash. They don't know what to do with it.
Go in those
Return.
stores. There's so many people in line. It's crazy. Like I was saying, I went in on a Thursday in my store, and there's like every checkout is open, and every checkout has 4 or 5 people cashing out, and every shopping cart there's $200. It's unbelievable the amount of revenue that store brings in.
And you know what the people love about it? They love the free samples. Do they have free samples during?
That's why. Oh yeah, they got them everywhere. That's what you go there for, right, Joel?
You could,
You
yeah.
go there and eat lunch, don't you, for free?
Oh, come
Yeah,
on.
and then
Everyone
for
does
free,
that.
and then
Come
I
on.
check out.
Everyone
Spent
does. I
four
thought
hundred
everyone did
fifty
that.
dollars.
So I guess it's not for free. They like the 50-cent hot dog at the end too. My buddy always talks about. He says, "Here you are, Costco. You spend like $350, but then they give you a 50-cent hot dog at the end of it, and you feel good about yourself."
Right. Also,
It's smart.
they have the onion grinder. Do you ever use that? If you
No,
want to put onions on your dog, the thing that like you just grind it and it just comes out in real little pieces on your hot dog.
it
You
make
should
you
try
feel
it.
good at the end of the trip. Because if you
Exactly.
just spent $400, you'd be like, ugh. But you get that 50-cent hot dog, and you leave the store feeling good. These guys are geniuses.
78.38. That was your high in the pre-market trading. Uh, All-time high in issue, right back up at 78.71. So did you have to own it yesterday to get the dividend, Dennis, or what?
No, because it just got announced.
Okay.
So now they'll set a date. I haven't seen what the date is set, but they'll set an ex-dividend date for it, obviously. And then the stock price will usually fall by the amount of the special dividend there. So, but it's getting the lift here, the 5 points, because they know that $7 is coming. So you have
Huh.
people
So what do
jumping
you
in here.
think? What do you think? I mean, did
I'll
yeah.
tell you, special dividends from my experience are worth so much more than buyback. So, like I was saying, if you did the equivalent of a buyback, the stock might go up like a third of what the buyback is worth. Where you get at the special dividend, it usually goes up by almost the amount of the special
Why?
dividend.
Why is that? Why is that?
Because investors like to get paid. I like to get paid too. I don't, I like getting that check cut to me and getting that $7 dividend there. So I would say, the buyback here is, you're okay. You're still getting paid in essence that because they're buying back shares, so you're going to have less shares in the float, which means there's more earnings for you. But I always say is, when I get paid, it's my $7, where the company is still controlling. If they were to the equivalent dollars amount worth of a buyback, the company's still in control of that. You aren't as an investor, so that's why I think that they like the dividends better.
All right, 8:35. We're gonna grab our first guest, our only guest of the day, Kirk Duplessis, the founder and head trader at Option Alpha. We'll be right back. Welcome back, traders and investors, to Benzinga's pre-market prep. I'm Spencer Israel. We're on the line now with Kirk Duplessis. He's the founder and head trader at Option Alpha. Kirk, how's it going today?
Good. How are you guys doing?
Doing good, doing good. Trying to get through all these earnings reports as
Yeah.
quickly as possible.
Yep. Yep.
What are you looking at in the market these days? It's been a while since we had you on.
Yeah. So I think right now, what's worked out pretty well over the last like month or so, or let's say like 3 weeks, has been a lot of like Euro type stuff. So FXE, FXY, those type of securities around this whole French election. So even though that first part of it is now done over the weekend, I still think there's probably a pretty good opportunity to trade some of these things pretty neutral. So that's what we're trying to do here.
Trading neutral. Can you explain? Can you explain that for
Yeah.
us here? Because I see
Yeah.
this thing. I'm just looking at the FXC here, the currency shares Euro Trust, and basically a straight up move on the French election.
Yeah.
103.50 hit 105.98 yesterday. Tell us how you trade that neutral, Kirk.
Yeah. Well, we were building into it. I mean, like the latter part of March, we started to see implied volatility, really jack up. And so we did a lot of iron butterflies heading into that event. So we were selling at the money options and then buying further out wings. Cause right, we didn't want to surprise, something crazy happened over the election and we got like a, Brexit type move. But we set up everything around like 104, 105 heading into the event. So it actually landed right where we wanted to be. And I think now that all that election stuff, at least the first part of it's done, right? And then like I think 2 weeks or 3 weeks now, they have the latter half of it. I think that it's going to be pretty neutral from here on out. So I think May contracts are still pretty good. We should get 2 to 3 weeks of pretty good time decay between now and then, and probably not too much movement until we get to that major event.
And I'm looking at the move here. So what you did, you were positioned ahead of time. What was your worst case scenario with the positions that you put on?
Yeah, worst case was that it just broke out, right? So worst case was that it had a move. We were expecting a move of about $2.50, and that's a little bit under what it's turned out to be, at least with yesterday's close around 105.98. So for us though, we were just playing the IV crush that was going to happen. We kind of traded it like an earnings event, right? Like once we get past this known event, we think volatility is going to calm down until we get to the next one, right? And so we might see volatility pick back up. But for us, we were just, the worst case would have been just like a total, huge move in either direction and not staying range bound.
Okay, and it's still staying within the range. And actually, what just kind of going back, my first question was going to be, we've seen some huge overnight moves here,
Yeah.
and the election, the earnings. I mean, with some of these stocks, just give us a little bit how you've been playing the earnings season. Have you been trying to play the stocks going into the number and then taking it off accordingly, or do you just kind of wait to see what the move is, let things digest, take all the volatility out, and then get involved?
No, yeah, I like to play it before, right? So I'm not going to try to pick the direction heading into the event. So I'm probably pretty bad at picking direction, and I realized that early on in my career. So I don't try to do that. But right before the actual earnings event, we try to sell some premium. So we'll try to sell either like an at the money straddle, very tight strangle. If it's a higher price security like a Priceline or a Google, we'll do like an iron butterfly or an iron condor just to give us some risk protection, and just because the margin's just too much to carry, for a $700-800 stock, right? And so like yesterday we did a trade in JNPR, Jupiter. We just sold the 28 straddle, and so that worked out really well. So I think that most of the time, a lot of these companies, if they have jacked up volatility heading into the earnings event, especially in those front week options, I think they're going to underperform, meaning like they're not going to move as much as the market expects them to move. And so I'm going to play that, right? So I think like ones that are coming up now, Baidu's tomorrow. We got, I think like First Solar's tomorrow, Starbucks, some of those other ones, Microsoft. I think all of those are going to generally over the course of like many trades and stuff, most of those are going to underperform. They're not going to move as much as the market expects. We might have an outlier here and there, and we'll deal with that. But I think the course of it is that they're not going to move too much.
Kirk, take us through, a potential trade here. So when you're looking at these options and stuff, are you looking at extracting the premium? Because usually there's a pretty good premium ahead of an earnings event there.
Yeah.
Are you looking at extracting that, or are you looking at like playing it like a lottery ticket style where, maybe like take us through, a potential trade there, maybe even looking into the Baidu earnings?
Yeah. So, all right. So let's go to Baidu and just see where we're at with Baidu. So Baidu's trading like 186. I guess it's going to be up to like 188 or so today. So we trade the front weekly options. Those are going to be the April 28th that expire this Friday. And so in our case, the expected move might be somewhere around $9, $10. Let's say if it's even like $15. And Baidu's at 188. So you could really sell like the 175s and collect some pretty good premium on the put side, and then sell like the 200s on the call side, right? And so you're still getting like well outside of the potential move, like almost double the expected move, and you could still sell some pretty good premium. So at that point, you could do a risk define, you could do it naked if you want to, but that's really what we're looking to do is sell, options just outside or far outside of that expected move.
What do you do in a case like where you get you get the move, you sell the option, and it really blows it away or something?
Yeah.
Is that just like scramble and do your best, especially if you're naked, or are you always usually putting them on where you're not naked?
Yeah, so I mean, like for me, I like to do them naked if it's like under $100, like as a rough estimate, right? So if the stock price is under $100, I'll do it naked because then I can handle the margin. If we have a huge outlier move, I can handle it. The margin,
right.
Differential is not gonna be that bad. Something like Baidu, you might want to do that risk define just so that you can handle it if it does make a $40 move for some weird case, right? But if it makes that move, I mean, look, it's all baked into the numbers anyway. So we'll try to adjust it. We'll roll down contracts, try to roll it out to the next month, give ourselves some more duration. And if ultimately it doesn't work, then we just take the loss and move on.
Your criteria for choosing stocks? Do you let the earnings calendar dictate it? Do you check for the implied volatility? Do you have price limits where you will or will not, like a low price stock like Twitter? Will you trade something like that?
Yeah, I'll definitely trade Twitter. I mean, Twitter is unique in that it's a big name, right? So it's going to have a lot of liquidity anyway. But something else that might be low price in the teens, maybe I'll just go away from it because there's just not enough premium to get into it, right? So I think there's a little bit of subjectivity in there, right? You don't want to trade something that doesn't have a lot of premium. So usually stuff in the 40s to $100 range is kind of like the sweet spot, which is where most things are going to be trading anyway. But for me, I really look at like an IV rank or IV percentile. Many different broker platforms have different, stuff that kind of ranks that. And so what I'm looking for is like a lot of volatility heading into that earnings event. So like, for example, like Twitter right now, even though it's coming up on earnings, it's not really that, like the volatility isn't really there for me to make a trade in Twitter, right? And it's low priced anyway. So if I did a straddle at like 15, I'm really not going to make too much money, right? And so that might be a trade where I skip this time. If volatility was, twice as high as it is right here, and you could get, 2x the premium that you could get in the 15 straddle, then yeah, maybe it's, worth a couple trades. But right now, probably Twitter's like a skip. Something like Baidu or Microsoft, a little bit higher volatility might be a better choice.
And looking at the different stocks, do you pay much attention to like analyst moves at all? I mean, is that something that's just you're just looking at your pure numbers and what the volatility is? I mean, are you skewed at all by analysts?
It's funny because I used to be an analyst and I covered REITs for a long time with BB&T Capital Markets. And so I know firsthand that, like even if I have an expectation, sometimes they might surprise or the market might even react to what I know is going to happen, right? So if I know the earnings are generally going to be good, then the market might not react the way that I thought it would, so I don't really I don't focus too much on that stuff anymore. I think it just play the numbers, small positions and a lot of occurrences.
All right, going through earnings seasons here, pretty much looking pretty good. Just overall market thoughts here. I mean, we kind of had that bump up from the French election, big gap area. A lot of people are, like me, I guess, maybe looking for us to come back and fill in the gap. Do you try not to have any market expectations? I know when we talked to you before, you were kind of keeping the powder dry. So in the event of big moves, any overall market thoughts?
Yeah, I think the path of least resistance has definitely been higher for the markets, right? I mean, so the French election stuff was obviously a good injection, and obviously equities liked it. I'm with you. I think we, potentially fill that gap before we start going anywhere, right? So the easy trades were made on the quick move higher. Some people might take some profits, and then we might continue to move higher from here. I think really it's going to dictate what happens with the rest of the S&P the rest of this week. I mean, the next 7 days or so, a lot of the S&P companies are going to announce. So where their earnings come in, I think really is going to dictate where we go from here.
We've been on the line with Kirk Duplessis. He's the founder and head trader at Option Alpha, talking option strategies in a difficult market. Thanks a lot, Kirk. We'll have you on again soon.
Thanks, guys.
Thanks, Kirk.
All right, S&Ps got a little bit of a bump here. I guess some comments on tax reform here by Steve Munchin, and he also says he
Mnuchin.
believes 3% economic growth is achievable. Got a little pop there in
We
the
did.
S&P futures. So just keeping an eye on that closing price right now, 23.85.
Yeah, financials got a little bit of a pop there too. They were all trading down, and now actually some of them have went green. Bank of America is actually trading in the green here now. So just a small little pop. So it's still digesting here. So just jumping over here. Yeah, J.P. Morgan, Citigroup, Morgan's, Goldman have all gone just slightly green. Actually, J.P. Morgan's still trading slightly in the red.
All right, did we finish all the earnings?
No, and if you have any specific stock you want to talk about in the chat, let us know because there's just a ton of stocks
Can
that
we do
reported
the
here. But
can we do the one notable rating that I saw today?
sure,
Which is
go to ratings.
yeah, well, really only one to note. BKU. We have an old-fashioned analyst duel this morning. Bank United downgraded by J.P. Morgan from overweight to market perform. They announced a $39 price target. Bank United also upgraded by Keefe. And let me find the exact rating.
Did
there.
that report earnings yesterday? Because sometimes what you see is when you get an analyst two chiming in the same day, it makes me think that there must have been some information that maybe came out the previous day, and I do see a big candle.
They had earnings. Yep, yesterday before the
That
bell.
that so a lot of times you see when the old analysts, you get a couple coming in and commenting. It's because there's new information from an earnings
Sure.
report out there. So it's probably the catalyst for why you get the old-fashioned, and so not as random as maybe some of these days here.
No.
But full disclosure, I'm not going to talk about BKU because I have a position on it. I don't like to talk my book.
Okay, and then
So
Keefe was
Joel can talk about it. We'll
Keefe
let
was
Joel talk
upgraded
about
there,
it.
upgraded by Keefe to outperform in a $41 price target. So price targets, $2 apart, not a big deal. But one upgrade, one downgrade. Thought that was interesting.
All right, taking a look, it did have the higher open on Monday along with everything else, but you know what? It's been sold into that. Opened up that day at 36.67, popped, made only a 9-cent high at 36.76, and then we just kind of been leaking here. So trading down here, or really flat in the pre-market. See if you can find some support if you get back into that lower 35 handle again. Yesterday's low, 35.27.
The other where I thought you might be going is Big Lots. BIG is getting an upgrade at Raymond James to strong buy, putting a $60 price target on the stock. Hasn't traded here this morning, but I can tell you it has bid up fairly significantly. 50-20 bid for 6,000 shares.
Ooh.
So that is significant here. 6,000 share buy order in the pre-market is significant, and that would put it up well over the $50 area, and also getting it right into that area of the triple top. I think it can take that triple top out there today. Looking up from the last 3 or 4 days, lots of size there, or lots of tops there at 50-38. I think it could take it out.
Yeah, the last four highs right there at 50-30. Actually, someone showing their hand with the bid right in that area. Also, man, you got another high right in that area at 50-38 and 48 from March 16th and 17th. I mean, this is the one where you want to see it open up 50-20, 50-30, and then print 40-50-60. You don't want to see it come back under the whole number. Yesterday's close 49.57, but definitely a potential breakout here to the upside in Big Lots.
Matt wants to know about Halliburton, HAL. No news on this one. He just wants a technical update on it, so we'll give him. Halliburton's been, this was one, had an okay earnings report. It popped on it, but like we say, oil price matters more than individual earnings reports, seems like, with the oil stocks. And Halliburton leaked right back down here to the lows. Joel, give us some technical thoughts on HAL.
Just better hold this 46.70 area. The last three lows between 663 and 678. So right there, you have your buyer just sitting on the low of the move. The close 47.02. Tell you, if we can't get back and stay in that 47 handle, may take a test of that triple bottom here. You do have crude trading lower by 41 cents here, 49.04, just hanging just above yesterday's low. But critical support for Halliburton at 46.70.
Okay, earnings tonight, and if there's any report you want to talk about that already reported, let us know. But earnings tonight, we got Buffalo Wild Wings, we got PayPal, we got at Las Vegas Sands, which is going to be interesting because of the win rate numbers there. You have Xilinx XLNX. You've got NOW, which is NOW, which is Service Now. You got
Yep.
O'Reilly Auto Parts. You got
Amgen.
PayPal. So
Amgen.
we got some earnings tonight. Let's go
All
to
right.
Buffalo Wild Wings.
Oh,
BWLD.
BWLD with their whippy wings. Nice move up here going into the report. You had pretty high expectations. Had a big move. I'm not sure why we had a big move on the 19th, or excuse me, the 20th. We went from 154.50 to 163.75.
Yeah.
Do we? Does anybody can pull up? Was it an analyst move, or I'm not sure what happened that day. But just hanging out here at the 165 area. The recent high of the move has been 165.70. So the fact that you had a nice move into the report, a nice bump up, pretty high expectations. High of the move 165.70. The closing high of the move was made yesterday, or actually before it hit that 165.70 at 163.75, and that's real close to where we're trading right now.
Triple Z in the chat there. He wants to know about ESRX. And this obviously had the big move yesterday because they were losing Anthem as they're losing the Anthem contract. And we saw this thing just get murdered. It did bounce, though, and it did bounce yesterday. I believe it was an analyst chasing price here. Wasn't there, Spencer? I saw an ESRX downgrade.
Edward Jones downgraded them to a hold. So.
Chasing price there, so it's down a little bit in the pre-market maybe because of that, but I don't know how much influence that's going to have. The big move obviously already happened yesterday. If I'm trading this thing, I'm looking at that low 57.80, and
Yep.
you want that to hold. Obviously, I don't know if I'm buying it up here at 59.65. A lot of times, you'll make that capitulation low, then you'll trade for a couple days above it, and then you'll come to retest. Sometimes the best buying opportunity is on that retest. And if the test passes, then you're getting it right near the low. If it takes it out, then okay, well, it's a low risk trade. So just setting it up for you, and this is all hypothetical, but let's say you want to potentially trade this on a retest. Maybe a few days goes by, maybe even maybe only a day or two goes by. It comes down like the 58 level, so you take a shot and you buy it at 58. If it goes down through 57.80, starts trading 57.50, I'm out. So I'm risking 50 cents, looking for a potential bounce at that level. That's how I would play on a retest strategy where you're looking for a potential double bottom. But a lot of times it doesn't work out that way. So you've got to have an out. Always have a contingency plan whenever you enter a trade. So that's like I always say, you can put any trade on as long as you know where your out is. And out is very well defined on this. And I would say it's 57.80.
This one got really beat up in the after hours trading, got to 56.40 before it mounted a rebound. So the intraday low, Dennis was talking about 57.80. The close is $60. Nice round number like that. I mean, for me, trading it technically is one thing, but fundamentally, you lose a 30 of revenue in one contract. I don't know how
Scary.
easy. Yeah, I don't know. I mean, are they going to replace that tomorrow? Don't know all the particulars of it, but here, you have a huge fundamental event, has an effect on the share price. So I don't know. Buyer beware in this one. A huge gap on the upside. If you want to be safe, look at that 61.17 area. Figure if it can clear that, then there's a lot of potential fill for a gap. But a lot of people, if they didn't bail out yesterday, maybe waiting to do it today. As Dennis mentioned, a good reference point at yesterday's low of 57.80.
We didn't talk about Alaska Air, ALK, and just going to bounce back into a couple other earnings reports here. ALK trading down the pre-market. Give us a number, Spencer, for Alaska Air.
Q1 EPS $1.05. That's in line with the estimate. Sales of 1.75 versus 1.78 billion dollars. The load factor 81.3% versus 82% for the same period last year. I did see something this morning that air travel. Let me pull it up. I think air travel for the quarter was down across the board. Let me pull up the exact thing that I saw. Give me 1 second. It was let me scroll down through my little news feed here. I'll jump in one. Oh yeah, air passenger arrivals in the U.S. dropped by 4.3% in Q1 according to data from Forward Keys, while arrivals in Canada and Mexico rose 6.1%. So, some context.
Stock trading down a bit here. It's had a little recent rally in the last week, just to get to call this a pre-earnings run here, and the earnings weren't great, so it's giving back some of that pre-earnings run here this morning. Joel, what are your technical thoughts?
Pre-market low, we got a spike right down to the $89 level, just under that 88.90. Very little volume traded here. Looking for a gap fill here. On Monday, we gapped up. We have a void in price between 89.31 and Monday's low of 90.07. So I'd see if it fills the gap, holds in just above 89. I think we can recover. You need to get up to 90.69 in order to fill the gap from yesterday's trading. If you lose that 89 level though, 88.11 is your 3-day low, 4-day low 87.20.
Just looking here.
Pepsi. We didn't get to Pepsi, did we?
Oh, we didn't do Pepsi earnings. Yeah, let's do Pepsi.
We didn't do Pepsi. They reported Q1 EPS of 91 cents. That's in line with the estimate. Sales of $12.05 billion versus $11.98 billion, so that's a beat. They do see their 2017 core EPS 4 cents below the estimate. It came in at $5.09. That's the number right there.
Man, this thing has been quiet lately, Dennis.
Big time.
Look at this. $114 stock. You had a 57-cent range yesterday. You had a 64-cent or 65-cent range the following day. So I would just use those parameters. If, in fact, we can clear a bunch of highs, though, all-time high 1461, hit 1457 yesterday. So you got to be careful of a seller in that area.
115.
Yeah, 2-day low 1391, holding just above that. Do see some downside if you take out that 1391 low to the lower 113 handle. I see your 3-day low at 113.27.
Yeah, we're trading, down here a point, but if for whatever reason it goes into rally mode here, I can see some size in the book at 115, 28,000 shares. That's significant for a $115 stock. So that could put a short-term lid on it if it goes into rally mode, but I don't know if that's going to come into play because it's already trading down about $1 here in the pre-market.
All right, S&P futures. We've gone green on those comments from Steve Mnuchin. So we're up 50 cents here at 85.50. Your pre-market high 86.75. Just big resistance up here. I'll stress this 23.90 level. Yesterday's high 89.25. Our all-time closing high in the June S&P futures for March 1st was 23.90.50. So there's your area in order to get to the all-time high at 23.98. Coming back on the downside, no downside action until we take out that pre-market low of 82.25. Below that, you have the intraday low at 77.50. So tight range here, 4.5 point range in the S&Ps. We'll know that will change when that 9:30 opening bell comes.
Looking ahead to tomorrow's show, we're going to be joined by Paul LaMonica, digital correspondent for CNN Money, one of our favorite followers on Twitter. You can find him at LaMonicaBuzz. Super insightful Twitter feed there. He'll join us tomorrow morning to give us his thoughts, and that'll be at 8:25. So I hope you enjoyed our show today and our chat with the Kirk Duplessis. And if you have any questions, feel free to dump them in the chat. If you don't listen to the show live, you don't want to, you can catch it again on our podcast on iTunes, SoundCloud, and Stitcher. Just search for PreMarket or Benzinga on any of those platforms. Last thing, please remember, as always, that all the information, material, and content from our show is for informational purposes only and not meant to be investment advice. That's it for us today. We're going to leave you now. Hope you have a good rest of your day. We'll see you folks on Thursday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.